Hello everyone, welcome back to our channel.
Hope you have a wonderful day. In today's video, we don't really usually talk about this topic as we don't usually do them anymore. Mortgage repayment.
Oh.
Property investing, mortgage repayment. I've noticed, well, in my social media feed, that is one thing that is being marketed quite heavily.
You know why?
Why?
Everyone makes so much money. Except you.
The investor. Yes. Except the person that is actually.
Correct. Except the person under the person's name.
I experienced this personally. Well, we experienced this personally.
Yeah.
So it sounds so good when it comes to the numbers because the numbers is so big. It's this and that, and like you can have $1 million property, this and that. Anyway, but I look at it. One of the main, I guess, misinformed, or they don't really tell you this, is once you've actually got a mortgage, you need to service this loan.
And the house, the property is not under your name, it's the bank's or your lender.
Effectively, it's not yours until such time as you paid the full amount.
Correct.
So for me, when that to happen is like life sort of changed. It shifted.
Well, back story a few years ago, one of our property investment, we paid it off within 7 years. And then once we did it, we don't like to have mortgage. We want to get rid of the mortgage as quickly as we can. So now we're doing this mortgage repayment calculator to let you know, guys, to let you guys know how we did it and why do we do it.
Yeah.
Right.
So at that point, that particular property roughly about $300,000. But we're just going to use a simple $500,000 price tag
because we bought the property 10 years ago.
Yes. So as an example, if you are thinking of buying a property, you probably want to know at least the basic principle on how mortgage repayment works.
Correct, because I remember back in the days we're doing vendor finance, we're putting all this number, and there were so many people asking, okay, if I'm paying this amount every week,
in 5 years, does that mean it's mine?
All paid off. So the like a lot of people don't understand when you pay a repayment, a lot of that is interest.
Mortgage repayment with interest inbuilt.
Yes.
So
I was surprised.
I was quite surprised when I'm receiving all of this info as well. I'm like, oh, so you don't know how mortgage repayment works.
Yeah. Anyway,
so we're using a just normal amortization calculator that is inbuilt in most of the banking system out there when you're looking for a bank to lend you money for, I guess, mortgage. We put down as an example of loan amount of $500,000 with a 30 years term, principal and interest. At this particular rate, it was 8.8% per annum.
What?
Now, this is just obviously or choose. Okay, so
well, 8.8. I think maybe variable or in investment. Wow, they gave you a very high rate. Anyway.
As a sample, okay. Okay, what if it was? I think that's it. No. Okay, what if it's this one then?
Just that one, yes. Yes.
Sorry, my mistake. At 6.34. 6.34%.
Yeah.
Can you choose? So, you can actually change it.
Just put 6.4.
6.
Okay.
Round number, 6.5%.
Okay. Yep.
So with that alone, at a $500,000 borrowing, that's not including your deposit, nothing else. It's just a loan, just a loan. So you want to go through it?
So you will be paying $733.
$730.
Sorry, I think you should change it there first.
Gotcha.
Yep. So because most of the bank and most of the people just go with the bank, and bank automatically put you monthly repayment.
Yep.
They don't ask you. They just put you in monthly. I don't know why. They don't give you option and they don't educate you. So when we first started, everything was monthly. So if you have $500,000, 6.5% a year principal and interest, repayment for the month will be $3,161.
So this is in calculating at 6.5%.
Let's assume for 30 years. And then your total amount,
The
loan
total
amount
it
that
will
you have
come.
to pay.
The total amount is 1,137,000.
So your 500,000 become 1.1 million.
And with the amount of 600,000 of that
is interest.
just
So that's it. So 1.1 minus 600,000 of the interest equals
500,000.
your loan amount of 500. So you actually pay more interest compared to whatever the loan amount you have. So there are some people don't understand why. Why do I have to pay that much? For us too, why do I have to pay that much? So we change it. We were listening or learning some information. If you change it simply from monthly to weekly, if you do a number for me,
weekly,
weekly,
you want it? Okay.
yeah.
So in
Same,
the weekly,
everything's the same, but why weekly? So the total is not much difference here.
Yep. So if it 37, it becomes 36, 35. So
Okay, 600. So the interest you were paying in monthly was $637,000 in 30 years. But if you change it to weekly repayment, your interest becomes $635,000. Like 2,000 different is not much, but why? Because when the bank calculate 12 months a year, but then when you pay weekly, every time when you pay, then we calculate your loan amount, so you're going less and less. So just by simply changing your repayment from monthly to weekly, you save $2,000 in 30 years.
So that's one option. Option one.
So first we did that.
We did that. We changed it from like a monthly into weekly.
Yes.
We changed it into principal and interest repayment.
Yeah, we were only paying interest at the beginning.
So we also add additional. So for us, we want to get rid of this mortgage as soon as possible. And works out to be in sum of loan, depending on what it is, you are welcome to pay extra. Some of them penalize you if you pay extra because obviously the banks doesn't earn a lot more.
Fixed the rate. Normally, if you fix the interest with the bank, they already have the budget to understand how much they're making. But if you pay more, which means they're getting less interest, so you gotta penalize for the bank is making less.
Yes. So as a whole, if you were to change to have an additional payment of $100 per week loan, you could reduce potentially your loan term reduction of roughly just 8.5 years. So that's just by additioning of $100 per week.
And the interest, it was $630,000 you paid before. But now it's down to $430,000.
This is
$200,000.
That's $200,000.
$200,000.
That's with an assumption that interest rates stable at 6.5%. Now, over the years, it's gonna go up, it's gonna go down, it's gonna go up and down. That's just in the condition of the 6.5%.
Yeah. So what if you change here higher? Double it.
So if we were paying $200 extra per week, that would mean your interest repayment going to the bank, it would go down to $300,000 instead of the $330,000.
And you save yourself
roughly about 12 years, just under 13 years.
So then it's 17 years mortgage instead of 30.
For us, this is one of the way for us to actually make a payment, like be debt free.
So that time, the mortgage we had was $300,000, and then there were tenants in there.
Yeah.
So we used it, the tenant money, pay the mortgage, that is offset each other, and then we pay additional money in there too. So then we cleared that mortgage less than 7 years.
Yeah. So
yeah.
Good old days.
Good old days. $300,000. Where can you get it?
Being in the position of, I guess, pursuing of retirement, I guess retire early, financial independent. The concept of it is actually having no debt, zero debt, or minimized debt.
Because when you at retirement, ideally you should own your own home outright, not renting.
Yep.
Yeah, you don't have a mortgage because that is a big chunk of money. If you can reduce your expenses, that will help a lot during your retirement.
You can still rent, but in the condition, obviously, that the market or the money that is in invested,
Yep.
it will cover your expenses of that.
Yeah, you can
But
rent, but then which means your capital or whatever you have in the market has to be
a
even
lot more.
Yes.
So for us, it's like, okay, then life after not having a mortgage, it is simply much better. And in fact, it's the other way around. Instead of paying a mortgage or paying, I guess, a bill of some sort, I would rather be the other way around, where I'm actually receiving an income, receiving dividends, receiving interest from the bank.
Yeah.
So that mindset alone changes a lot. I guess the thought process of receiving money from the bank was like, oh, this is kind of interesting. How does that work? But yeah, for us, that's one of our sort of tipping point, realizing is if I have payments to anywhere, that means you're doing it wrong.
Yeah, well, except the house. You have,
except the house.
Like, how can you pay the lot at one hit?
Well, yeah, unless obviously you, I don't know, somehow have your side hustle to
Make
produce
it
a
work.
lot of, making a lot of income from it. But yeah, that's one way of looking at how does a mortgage repayment calculator work.
Yep.
So that's just our 2 cents, guys. If you like this type of content, don't forget to subscribe, comment.
See you next time.